Isn't it strange that we are seeing record highs within certain stocks during a time in which the economy is under its worst conditions in a century? Isn't it weird that there is negative growth and prospects for many sectors and yet the stock market roars higher? Or is it possible that we're simply watching a movie, a predefined script? Well, you came here for the truth, so let me unveil that for you. Today we're going to look at some information that I believe will show you the two sides. We are going to look at what's been happening in the markets, and it is unfortunately crazy. There is no way to explain this and actually make sense of it. There's nobody that can come out and suggest to you all of the reasons and all of the facts which support where these valuations are at. I totally understand the people that say, I realize this is crazy. I realize this is messed up. It should not be here, but it is because of the Federal Reserve. It is because of the support from the government. And therefore, I'm going to put my money in. That is a whole different story. But there is a group of people who suggest this is right. This is where things should be at. Despite what's going on, we need to ignore all of that and look at some random PE ratios or any other statistic. And it is nonsense today. None of that makes sense anymore. None of the fundamentals are present, and we have gone far beyond reality. So I've got lots of charts. I've got articles to show you. Some very important names in the financial world have said a few things. I want to bring those to you. Let's begin. Mike Novogratz, the longtime money manager, said that the stock market is, quote, unhinged from reality as it rises higher, and small investors should get out before it crashes. That is a pretty bold statement, as you can see here. We are in, quote, irrational exuberance. He used that term, making Mr. Greenspan very happy. This is a bubble. The economy is grinding, slowing down. We are lurching in and out of this problem, and yet the tech market makes new highs every day. That's a classic speculative bubble. Where people are disagreeing here at this point is, I realize that this is a bubble, but it will go on forever as long as the Federal Reserve is printing money. Wall Street heavyweights, including Stan Druckenmiller, David Tepper, have been sounding the alarms about the stock market for months, yet the S&P 500 index has inched higher, erasing the losses that we saw earlier in 2020 and notching its best quarter since 1998. The technology heavy Nasdaq has had an even more dramatic rise. And I'm going to show you a particular example in a moment, but we have seen the growth and it has been unbelievable. We're going to look back at this certainly 10, 20, 30 years and realize how crazy the rise was. What happens on the way down, if it would be a soft landing, if it would be an absolute crash, that remains to be seen. Financial analyst Gary Shilling said stocks could tumble as the economic recession takes longer than expected. Quote, I think we've got a second leg down, and that's very much reminiscent of what happened in the 1930s, where people appreciate the depth of this recession and disruption and how long it's going to take to recover. And that's really the key here, because the market has completely ignored what's going on in the actual economy. As you see, the stocks were going significantly higher, and they dropped down at a rate we have never seen in history before. Then it turned around. For many, many stocks, this has gone actually into new highs, and that has been seen with the Nasdaq in particular, but of course we've seen it in other examples as well. Others haven't quite got there yet, but they have really gained much of their losses. So it all depends on where you look, but essentially there has been an ignoring of what's actually happening, because many of those statistics have barely turned up, and a large percentage of them are still down near record lows. You could see what's been happening in different industries, and they've been decimated, and we haven't got to the point yet which we even reveal all of the worst parts. Look at what's going on with retail. We have barely scratched the surface. You have to look at it on all of the respects, things that are coming in the coming weeks, in the coming months. This hasn't been brought out to the public yet. Many of the companies are looking through their bank bankruptcy process right now. They are thinking, should we even stay open at all? This goes for the very smallest of these locations and also goes all the way up the food chain. Gap, a massive corporation, hasn't been paying their bills. This is going to be some seriously hard times, not just for Gap, but you look all around. These different retailers, these are anchor stores in these malls. The malls are going down. That takes the CMBS with it, commercial mortgage-backed securities with it. It's going to be huge losses there. We know that. We know about the downgrading of the corporate debt. That's another issue, but nobody wants to acknowledge this because of how serious it is, because of what this really means for the financial system. They want to talk about the Nasdaq and how successful those who have been putting money into it, those have seen their stocks appreciate. But my goodness, how things can change in an instant. Jeffrey Gundlach makes an extremely important point. Why bother with any taxes at all if Chair Powell is correct that there is no limit to expanding the Fed's balance sheet? Implicit in his declaration is that the whole tax collection system is a royal waste of resources. I totally agree 100%. If you can tell me that the expansion of the balance sheet does not impact inflation, if you're telling me the expansion of the balance sheet does not have a negative impact on Main Street, why aren't you just printing money and then putting it towards the taxes? It makes a lot of sense when you think about it. If they're telling us the truth, because they wouldn't lie to us, right? Well, if they're telling us the truth, then why wouldn't they do this? Why wouldn't they go about doing this even for a period of time? Just say for the next 5 years, we've got an issue here, we'll take care of it. No. What they do is a Main Street lending program. What they do is the PPP loans. They have these stimulus packages, and then your taxes go up later on. It's like you're in need and they hand you something and they smack you in the back of the head as soon as you take it. This is complete corruption, but they don't want to put it out there like that. They want to give you the carrot and dangle it in front of you. And I can't help but think of a hamster on a wheel. You think you're moving, you think you're going, but you're just spinning in circles. Sentiment Trader had this chart here, and you could see at the bottom what we're looking at is the CNN fear greed proxy. I'm sure you've seen this before. I brought it up on the channel many times, but they're connecting that with the S&P 500, and you can see what has happened over the last little while. When we get to these points of extreme greed, it doesn't necessarily mean that the stock market crashes after, but things start to get a little volatile. We don't necessarily have new highs from that point, and things change rapidly. As you could see, many examples. The red dots just here is one example, and you could see where we are at today. It looks like right now there is such greed that historically these are times we will acknowledge when we look back in the past. This is just giving you an idea of what's been happening. You could look at the RSI. I mean, there's so many different types of indicators. You could look at the VIX index, which is heavily manipulated anyway, the MOVE index. There are many out there that I've shown you here on this channel before that I will continue to show you. There's a lot of data here, but essentially we've overextended ourselves. S&P 500 more concentrated in the 5 largest stocks than ever before. That is Microsoft, Apple, Amazon, Alphabet, and Facebook. Looking back in 2000, that was Microsoft, GE, Cisco, Intel, and Walmart. Now, of course, today these are extremely important companies. You know the tech stocks have really grown. Technology encompasses more of people's lives every single day. I get that. I know that. But I find that not just in the markets, but if you look at the way it works in life, when things get out of whack, somehow they find their way back. The analogy that I like to think of is when you see what happens with waves on the beach, how the tide comes in and out. And this happens to people in a way that they can't necessarily predict. But if you stand back, if you zoom out, things start to make a lot of sense. Nasdaq stocks led by Tesla continue their blistering run while chill envelops the rest of the market. Tesla's amazing run higher. You could see this in what has happened here over the last year. It has been a serious run up. No doubt much of that has been in the last month. It is unbelievable to see how fast this one stock has risen. And if you look at the patterns, of course, this happens over and over and over again. The irrational exuberance is certainly present. It's got nothing to do with Tesla. I'm just seeing it from the statistical standpoint in many different stocks. And then you look at the exact opposite end of the spectrum. There are tent cities that have been popping up all over the place. Take a look at San Francisco as an extreme example, where you have the highest valuations of these corporations. Silicon Valley, the houses worth $50 million and billionaires everywhere. And then you've got so many people living on the streets. If anybody lives in San Francisco, please share your opinion in the comments. I've heard it from people over the years that have told me that there are so many people living on the streets today more than ever before. You've seen it in the news, I'm sure. This is a problem because there is a growing divide in between the haves and the have-nots, and the central banks are creating this. This is an interesting article out of the Wall Street Journal. If you want to know what's going on with oil, then this is definitely the one to read. This is what it looks like when a Texas oil boom busts. A year ago, the Permian Basin region was one of America's hottest labor markets, fueled by a fracking gold rush. Today, the oil field has all but shut down, and everyone is feeling the pain, from restaurant owners to landlords to barbers. This is what I have talked about on numerous occasions when I say the ripple effect or the domino effect, because you've got a market and it needs everything around it to operate. When you see what has happened with oil, the price comes down, even though it has come up from the bottom, which is basically zero at one point. It has now come up to a level that is still not high enough for many of these different companies to operate at. They need higher levels. This is a very expensive process. They get into the details here. They talk about what's happening, but the economy will suffer locally as a result of these prices being too low. They think that they can continue on forever. Something like this happens and it really wakes them up. Nordstrom tells landlords to expect just half of the rent until January 2021. Now, how interesting is it if you were to do the same thing to your landlord? What about if you went to your employer and said, you're now going to pay me 50% more, and that's just the way it is? What do you think your employer would say? I mean, this is unbelievable. These big corporations, they know that their landlord is going to be very screwed over if they fail. This isn't very good for everybody involved. Imagine the employer. Okay, that's one thing. The landlord, that's another thing. But the employees, are they going to be able to keep everybody? Are the customers really going to flow in, even if the stores start to open up? Many stores have been closing because they know what's ahead. They know it's going to be slower sales. They realized that the trend was in already 2019, and this was just the final nail in the coffin. This article here is talking about New York. The nation's largest transit system teeters on the edge of an unprecedented financial crisis, leaving it with few options other than imposing major spending cuts and borrowing billions of dollars. There is much more in here, but understand, taxes, guess where they're going to go? They're going to increase. Service is going to decrease. How do you like that? Well, that's what's going to happen. In all of these cases here, no matter where you look, if it's New York, California, it doesn't matter. You see the same problems. The globalist elite get everything. All of the money printing goes to the top 1% and higher, really. It's the 0.001%. All the rules and regulations are set up to squash you and keep them up. And the mega yacht owners are laughing their way to the bank, which, by the way, they own. They create booms and busts, and they can actually squeeze people out of all of these different ways that they think they're riding along making money, and people just get burned over and over again. It is truly unfortunate to see it happening, to see people swindled, if they would only take the time to learn. That's all for this video. If you found that informative, hit that thumbs up button. When you do, you are supporting me. I want to thank you for that. Simply by clicking the like button, you can help me out. Thank you. If you want to check me out on Instagram and Twitter, you can do so at TheMoneyGPS. Do you want to learn how to sell stuff online? I'm talking about e-commerce. Well, you can learn for free. I created a free, 100% free e-course, the AmazonGPS.com. If you want to understand the financial system from A to Z, top to bottom, everything you need to know is in these two books, and you can get it at the link in the description. If you want the audiobook, that's available at TheMoneyGPS.com. Wait a second, don't go anywhere. Have you seen this video yet? If not, you definitely want to watch it. Everything is in there where I get into so many details. If you haven't seen it, click it. I'll see you there.